All right. Setting it up now. Tell me when you see us. Setting it up now. We are live, buddy.
Let's go.
Let's do it. All right. Hey, everybody. Josh Knoll here, coming to you all again today, live, joined by my podcast co-host. For some of y'all that may not realize, Jay Stubbs, Regional Director with First Protective Insurance Group. He's based out of Mobile, but serves the Gulf Coast. He and I host a podcast called Every Dollar Counts with Josh and Jay. This is not a podcast episode of that. It's more of a live feature where we can come in a little bit more timely and talk about what happened in the market today again. And the stimulus package and just a couple of things for folks to consider as we're trying to navigate what appears to be a little bit uncharted waters. I have to, if y'all will bear with me, I've got to read a quick disclosure to keep compliance happy, and I will zip through that real quick. Advisory services offered through Prime Capital Investment Advisors, LLC, PCIA, a federally registered investment advisor. Following commentaries and responses are the opinions of myself, Josh Knoll, and are not necessarily the opinions of PCIA, and are for informational and educational purposes only, and are not and should not be considered investment advice. Past performance is no guarantee of future results, we hope. No guarantees expressed or implied. All right, Jay.
Yeah, Jay Stubbs, FINRA registered with Pro Equities broker dealer. My Pro Equities broker dealer is not affiliated with Josh in any way. My broker CRD number is 290-6181. I'm licensed in 29 states. Company I work for, First Protective, is independent of Pro Equities, and I'm not affiliated with Josh Knoll or Prime Capital Advisors. So Josh, after your commentary, I'll just kind of say we all need to continue to connect. And as financial service professionals, we need to continue to talk and to listen. The markets were down again today. Certainly emotional roller coaster. In 3 days, we've gone down, up, down. This is a emotional issue for a lot of people here in our community along the Gulf Coast. We've got lots of news coming out on the distancing and the quarantining and the limitations that we're going to have put on our society. The retail sector has taken a huge hit, and that's why we're seeing this market volatility go up, down, because they're trying to get a grasp on it. But listen, this health crisis, this time of uncertainty, it's okay to feel not okay, especially as it relates to your money. And some things that we will continue to do is just, answer any questions anyone has and keep everybody up to speed on what's going on and what our thoughts and opinions are.
Well, and Jay, one thing that we wanted to make sure that we were laying out for everybody is if y'all have a question, now we can't give specific recommendations. We can just kind of give you broad-based market answers. But if y'all have a question, hit us up. We're monitoring this between our Zoom and our Facebook. The Facebook tends to lag a little bit. But we will definitely get your questions answered. So thank you all for joining us. I see a bunch of people popping in. That's awesome. Jay, a couple things I wanted to go over real quick was on the radio show that I host, Focus on the Five, which is Baldwin County, Alabama based. I had a pharmacist on today and really had a lot of interesting things to say. So before we get into the market stuff, that show will come out Friday, but I think it's important on this. I specifically asked him with the coronavirus and everybody coming into the store, increase in business, has he seen a delay in the availability of normal non-coronavirus or viral drugs? And he said no. He said, if you were diabetic, heart condition, anything along that line, you are able to get your medication just as you were before. Which, to be honest with you, kind of surprised me a little bit. I felt better. I expected to go into that radio show today and feeling worse when I got out, and I feel much better. He talked at length about the supply chain and some of the fundamental things that come up here. He had no answer for hand sanitizer, so I don't know who does, but hand sanitizer is out the window. So
we're watching those levels like a hawk, and make sure that you're not an outcast in society by skanking some hand sanitizer from the exercise facility that probably is already shut down.
Right. Well, I know there's a way to make your own hand sanitizer, but that involves rubbing alcohol, which apparently that's out too. So I guess we'll have hand sanitizer with whiskey and aloe pretty soon. The other thing I wanted to just kind of talk about, let's look at, Jay, let's just look at what the market did again today. And then I want to talk a little bit about the stimulus package that just got announced. I believe I was in the radio show studio. So I don't know if they made that announcement before market closed. Based on the fact that the market recovered, the Dow recovered about 800 points. I'm assuming they slid it in right before close. But even with that, your Dow is down 6.3, NASDAQ's down, S&P down. I haven't looked at the Russell and all that, but just raw numbers, something you and I talked about Monday. On February 12th, I believe, the Dow Industrial Average was at 29,551. Today it closed at 19,898. So we are right at the cusp of a 10,000 point drop and roughly a third of that index anyway, right? That's not, the Dow is a fairly limited in scope index, but it's a good bellwether for what the overall market is doing. But I'm sure that the other indexes follow that down. So that kind of sets the stage, Jay. I want to ask you, we talked a little bit about this Monday, but what would you say to folks that are looking at their balances, their 401k, their IRAs, things like that, in a broad sense? What would you have to say?
Well, I'm looking at mine, and granted, I'm 43 years old, so I've probably got a 20, 25, maybe even 30-year history or future ahead of me as far as an employed individual. I'm looking at mine, but knowing that it's not a realized loss until I actually sell out of a position. So if you're looking at something and you're saying, man, that's down a bunch, don't fret, because if you can
consider as we're trying to navigate
money in there, then you
to
continue to do the things that you need to do in order to buy low and keep riding this. Now it's down a bunch. I don't think you need to really evaluate that too much. Just know that if you sell out of a position, that's when you actually have a realized loss. Now, all that being said, we know volatility in the marketplace. We've seen volatility. If you hear the news back to 1987, we had volatility in 2001, we had volatility in 2008, 2009. While that's performance is no indicator of future results, we know we're going to have volatility in this market. We've seen it for the last 3 weeks. So just expect it. And look for some as an opportunity to get in, or what we call dollar cost average in. Maybe you take a little bit of money and slide it in there over time, but nobody knows where the bottom's going to be. Nobody knows when we're going to have a rebound. We just know that we're going to experience volatility until we get some news from the pharma companies that the testing is working. We get some news that the flattening of the curve is happening, meaning all of the stories of, I guess, people being diagnosed as positive. Once we see our efforts in social efforts to quarantine and to keep out of the large groups of people, once we see that to start flatten, I think we'll start to see uncertainty kind of settle down a little bit.
Well, one of our friends, a commenter, Stephen Nelson, says, "Tell them the good news." So let's tackle it this way. Volatility is a word used when in multiple situations, but as it refers to the market, it's when you see great ups and downs. And that volatility really, in my opinion, it's like riding a roller coaster. Some people are comfortable riding with it. They've strapped onto the roller coaster. They're going to ride it up. They're going to ride it down because they know eventually they're going to get off the ride. I think it really hits hard. Volatility hits hard, especially when the volatility is skewing down, is in two broad age groups. One is the beginning investor. The other is the investor that is nearing the end of their accumulation period. And it affects those two groups differently. So let's take the beginning investor. Right now, it's more of an emotional gut punch. You've worked hard. Let's say you're young, 20s, 30s. You put money in your 401k, or maybe you've got a standalone IRA, and you've worked for typically a wage at that age, and you're putting this money in, and you know what that money meant per hour of your labor, and you're seeing these losses where it's like, man, I might as well have just worked for 2 months for free. Fair enough, Jay? Right?
Fair enough. Yeah.
So it's more of an emotional gut punch, even if the number that you've put into the investment is not humongous. I'm going to circle back around to that. Then towards the end, volatility, that when the person is getting to the end of their accumulation years, that's the one that can be a little bit more frightening because they don't have time to recover, right? So I think you have two different scenarios here where somebody is maybe newer in the market or new to the market. And this is the first time, Jay, this is our first downturn in how many years? 11
Well,
years?
we've gone what, nearly 12 years. We went 11 and several months, 11 years and several months on what we considered a bull market run.
Well, and so there are people that have spent their entire working career and never seen their 401k take a deep dive, at least for very long. There's been a couple mini corrections here and there, but over time they've never seen it go down. So now they're seeing this thing jumping all over the place. My guess is a lot of people are checking it probably more often than they should necessarily, but a lot of times folks have only seen that thing go up. Now, some of us older guys have we've lived through 2008. Some of us even old enough to have money in the market in 1999, 2000, right? So what happened during those time periods when you saw this, and it's easy to say, Jay, because you and I've got some years under our experience and we've helped folks with a variety of different situations. So it's easier for us to say, well, just hang on and write it out. I get it. I get the feeling of, man, I'm watching the news and this thing is getting worse and worse and worse, and I just need to get out now. But if you look back during 2008 and 2009, and I don't have the exact statistics in front of me, Jay, you're better at that than I am. But if somebody had stayed invested during that downturn, what has been the percentage return roughly over the last 11 years since that downturn? I mean, I'd have to look at the chart, but I think they made their money back up within 3-4 years at most.
The reference that I heard on the news the other day was over 300%.
300%. Okay. So now, are we gonna have another 11-year bull run ahead of us? Who the heck knows? You know, if anybody can call that, then
I hope so. We're a big, strong country. I sure hope we can.
Right. I do, but we can't guarantee it. We can't predict it, right? What we can predict is the one thing is if you sell low right now, your loss is a number on a screen or on a number on a piece of paper. If you sell low now you realize that loss. Now getting back to where you were becomes incredibly harder than it would have been if you would have just stayed the course, especially with the money that was meant to be part of your retirement. I mean, if you're talking money that you need right now to pay the mortgage, buy groceries, something sitting in a non-qualified account, I get it, right? You got a brokerage account and that's the only money you got access to, totally understand. But if you got something that's sitting in a retirement account, something that's supposed to be long-term, then you really want to have a lot of consideration towards what are you selling at? What do you think of that, Jay?
I don't know that I'd be wanting to sell right now, and I'm not making a recommendation. I'm 43, got 25, 30 years of time ahead of me. I'm looking at this as an opportunity in a down market to maybe have some capture of some of my dollars in an opportunistic fashion.
Yeah,
if I'm
sit with some cash, right?
Yeah, obviously, had moved some to the side when we started seeing some of this going on. But long story short, volatility's out there. My 2 cents is all based upon the stomach of the individual investor or the household or the business owner, and he or she or they need to have a conversation about things and look at their time horizon and evaluate it with an advisor to make sure that they're making the right decisions and making sound decisions based on their overall objectives and goals for the future.
Well, and Jay, on that note, there is one semi-technical thing I do want to discuss. Folks that have money sitting in a 401k or 403b. Now, I'm going to say something that is not particularly the case for every single situation, but it's more often the case than not. If you are sitting in that thing, and let's say it's at a previous place of employment, and that thing is probably somewhat passively invested, so you're seeing it really follow the market gyrations, and you're thinking about rolling it over into a IRA, individual retirement account. So you're going from a pre-tax instrument in a 401k/403b to a pre-tax instrument in a traditional IRA. You need to think long and hard about that, because you've got to understand with this much volatility, when you come out of a 401k, generally speaking, you have to liquidate your position. Timing gets off, you liquidate low, you come back into the market, into the IRA, and you go back in to buy. Potentially you could be buying higher than what you sold at, right? So the point of that is I want folks to consider that. We've had a couple situations here the last couple of weeks with some of my clients where on the 401k that required the liquidation, we're holding off a little bit till the volatility goes down. Now, take that exactly what I just said, flip that a little bit. If you have an IRA, if your assets are already in an IRA, individual retirement account, and you are looking at, let's say maybe you're self-directed, or Jay, let's say maybe your advisor hasn't called you and is not out there in the public like this. But if you're sitting
I sure
there,
hope that not been the case for
Not
anybody
either.
going through this. If you have not spoken with your person or team that manages your portfolio, or that you get advice or seek counsel from as it relates to finances and investing, I don't know what to say about that. I sure
Well,
hope that.
I hope it's not the case. You and I are surrounded. I mean, we've intentionally surrounded ourselves with good other advisors in our network, right? So I think it's fair to say that the folks that we affiliate with, that is not the case. But the point being is, if you go from an IRA to an IRA, so traditional IRA to traditional IRA, which is pre-tax, or Roth to Roth, which is post-tax, you can bring those investments over in kind. Now, what does in kind mean? It means that you can take the investments, generally speaking, and you can have the same holdings as you make that transfer over. Why would you make that transfer over? My only thing I could throw out there to you is, if you were sitting there trying to navigate this on your own, and you feel like professional guidance through this kind of time period would be helpful, then that's one way to look at it. Understanding that you're not going to be liquidating those positions. Generally speaking, you have the ability to come over in kind, which means the holdings stay the same. So I want to make sure people know that, especially if someone is right now looking at, let's say they've had a long time accumulation and they're looking at rolling their 401k over. I'm not saying don't do it. I'm just saying you want to look at, what does your current 401k provider require when those assets go out their door? Are they requiring a liquidation? If they're requiring a liquidation, whatever the price is on the day they liquidate is going to be what you sell at. And you sell on a day like today, and then a couple weeks later when the money comes over and the market's rebound a little bit, now you're going to be buying high. So I just want to make that point. All right, Jay, I got one more thing we'll talk
All
about.
good points. All good points as it relates to money and investing and volatility in markets and timing and qualified dollars, 401k, IRA, 403b, you name it. All very good points, Josh. What else did you want to have in there?
Last thing, and not like you and I are breaking news here. I'm sure everybody's kind of seeing at least a little piece of this, but it looks like they passed a relief package. Looks like it's $1 trillion, and it looks like half of that, which would be 500 billion with a B, is scheduled for direct payments to everybody. So I don't know, Jay. I mean, I don't know if they had a choice. There's a lot of people out there.
Stimulus. They needed to put some money in a lot of Americans' pockets. Totally agree with that line of thinking. It's a bipartisan effort. The House passed it pretty quickly. They were the ones that put it out first, and then the Senate comes in and they approve it after some deliberation on what needed to be included. A lot of extra stuff went in there. So there's a lot of provisions for different industries to be bailed out. Specifically, the airline industry is going to be one of the very hardest hit industries in our world. Several of those companies are going to be in bankrupt status, according to some news reports, if things don't get back to normal here within the next few months, just because of the cost of their doing business and the margins being what they are. So I think the stimulus package is there. A couple of things I am taking from that forward looking is you pass a $1 trillion or more stimulus package, while we have to worry about what's important now. And I'm certainly glad that the federal government and the administration has done what they've done. You can't not think that taxes down the road are going to have to be discussed to go up in order to pay for the stimulus. So just everybody needs to keep that in mind with respect to their dollars. You're going to want to look for tax-free growth, tax-deferred growth opportunities, so that any of that increasing tax burden doesn't hit you down the road 2, 3, 4 years down the road if legislation is passed to increase taxes to pay for the stimulus that's now out there. So keep that in mind.
I wonder if the Roth is going to be on some people's minds here.
Oh yeah, absolutely. You're gonna want to look for the best tax deferred opportunity out there. So, that stimulus package is strong. It's very, very strong.
Yeah, they got to it quick. I'm really praying for our restaurant owners, our local business owners. You're in Mobile. I'm over here in Fairhope, but both Mobile and Fairhope have a very high percentage of small business owners, entrepreneurs, and you and I. Part of the reason we're coming on here is just try to be out there for folks that are, sometimes during these time periods, Jay, everybody feels very alone, especially you and I talked about this last time, and I'll end it with this, but in 2008, when everything crashed, it was different reasons why it crashed, but it wasn't like you and I couldn't go out and have a cup of coffee or have a beer and drown our, talk about our sorrows, right? Well, now you got, not only are you got a market that's going a little bit nuts, you also have the coronavirus where you can't, you don't necessarily have that ability. So I think that's tough. So you and I are trying to intentionally leverage this technology. There's power to human interaction. There's power to seeing someone talk directly to you. And Jay, I'll be quiet after this statement. On the radio show, we specifically talked about what is one of the worst prison punishments you can get. One of the worst punishments you can get in prison. I'm not talking about death penalty, but what's one of the worst punishments that can happen to you in prison? Solitary.
What's that?
Solitary.
Solitary.
Then put in solitary. Now, I can't tell you historically how bad solitary was, but I'm assuming in modern times it's at least a reasonable holding cell, but you still physically deteriorate from the fact you don't have human interaction. So my point being is, this is our version of human interaction. We're going to be here every step of the way. Whatever questions y'all have, please hit us up. We'll do our best to answer them and really try to just provide comfort to everybody, because we're all in this together. I mean, 100% in this together. So that's all I got, Jay.
One of the, as it relates to the risk management side of things, while we've been kind of talking about the opportunities and the dollars in the market, keep in mind that there are people out there that still have risks and family need planning that needs to be addressed. And they were probably in the middle of it, whether they were looking at their insurance for protecting their income, or they were looking at insurance to protect against premature death, or maybe they were looking at insurance for the likelihood that long-term care might be used or needed down the road. All of those companies out there, they have they're experiencing the same sort of difficulty with the turmoil in the marketplace. If you are in the need or in the market for still looking at those things, you need I'd say you need to go ahead and act. There's ways that you can put plans in place with your advisor, with people like you, Josh, and others that you don't even have to see anybody face to face. You can go online and do fluidless underwriting. People are looking for that kind of stuff and need to be knowing that it's out there.
Very well said. All right, Jay, I'm promise I'm ending on this before I shut the video off. I made a promise to my dad. He called me up Tuesday. He said, listen, I love the video, but quit touching your face. So Dad, I've done a good job not touching my face. I get it. So,
hey, right. Josh, this is a sign that it's time for me to stop. I've got one of my fortunes coming on in. So we're gonna go off, and we'll be back in a day or so.
That's right. Sounds good. Thank you all.